Welcome to the Building Web3 Podcast. Today, I have my good friend Robert. He is the head of economics at 1KX. Before we get too deep into 1KX and everything that you're doing there, tell us a little bit about your background and how you got into crypto.
I studied math and finance back in the days, then founded a startup. After some years, went in some TradFi consulting and banking, more the traditional career that you would do with that background. Eventually, I landed in e-commerce, where I first designed and operated pricing algorithms. Later, went deeper into data science, actually on language models. This was 2018 when transformer models actually just started. But then DeFi summer, however, pulled me into crypto, and perfect combination of the possibilities in token design plus finance use cases. 1KX eventually also then said, come join us. So here I am.
What attracted you to 1KX? What were you like, ooh, 1KX?
I actually know the founders, the two founders, even before they started the fund. So we have been in touch forever. Eventually they came with some problems, mass finance related, ask for advice, whatever, or input. Then as I got more attached to the space, they also grew the team and the scope. And then they said like, okay, why don't you want to join us full time?
Perfect. And for people that are unfamiliar, actually first, let's talk about what is 1KX in case anyone doesn't know what it is. So give us a brief overview of the mission, like what you guys are doing over there.
So 1KX is a leading venture investment firm, partners with forward-thinking founders, protocols, communities to help grow the crypto ecosystem. Our mission, if to put it this way, is to bring the best possible version of a decentralized economy to life, and that's why we back the founders, protocol communities who are building this into reality. We believe that. To put it really big, right, that humanity's best chance for a prosperous future will be enabled with token networks and communities, which is why we see the token networks as the way to structure these coordinations and societies to move towards these goals. There's not a particular domain that we are focused on for investments, but we believe that token networks are the future, and this is where we come into play, helping crafting these token economies so they can form that foundation of economic and social participation that we envision them to be.
Mm-hmm. And even though you said that there's not a specific focus of 1KX in terms of like an investment vertical, is there an investment vertical that you guys tend to like is a majority of the investments?
I actually don't know. We're heavy in infrastructure, middleware, but then it's also DeFi, NFTs, gaming.
Truly a mix of
I need to consult the analyst to give me the breakdown.
Very interesting. Okay, so for anyone that's unfamiliar and they just heard the term head of economics and they're like, what that? Like, tell us a little bit about what is a head of economics, and what do you essentially do?
I cover lots of things. There is the whole part around economic design for protocols, which is typically, since our investment thesis is token networks, is about designing tokens, token designs, token economies, to typical supply demand. How do you set up the incentives, value capture, value creation, the typical token design aspects, which is the ideation phase, but then also simulations, these types of things. But it goes beyond also like more on the research side to understand different markets of that we invest in, right? It could be something like for NFTs, understand how are price distributions, how different tiers, there comes the data analytics background, or deepens, really understand like how do they used to build up their economies, understand what Ficon did, Arweave did, understand their inner workings, understand the stuff that's not out there. Just recently looked into understanding the cost of the deepins, for example, because this is off chain. Like nobody knows how much a node operator pays, which is obviously a problem for you as a steward of such protocol, because I mean, you run a business and you don't know your true cost base. So yeah, there's lots of interesting economic questions that I help to answer. I would say 50 to 80% in cooperation with the portfolio companies we invest in, and then the other part more like research driven, based on the discussions in the team.
Yeah, I think depins is a good place to start. So let's say I'm going to create the Jax depin protocol, and we're going to help provide Wi-Fi with some kind of IoT device, right, for people. How would you instruct me on doing like the token design in doing all of the things that you help other companies with?
I'm not sure if we have enough time, because first of all, I would kind of like pull out our framework, especially when it comes to token design and token launch at all, because that's obviously not just the economic design. You have the legal framework, all the tax and compliance stuff on top of that you need to take care of. You have the whole part about the markets, the integration, the listings, the liquidity that you also need to take care of. Put on top everything related to communicating, marketing of your ecosystem. You want to grow not just the token but the ecosystem around it. And yeah, then the core, how do you kind of like want to build the token supporting whatever goals your product has, right? And if the goal of your product is to spin out a network of IoT devices, then I would go into it and I'd try to understand, okay, what's the unit economic here of your network? Like, how expensive is it to do these devices? Who is your customer base? I mean, this is very, very much Econ 101, right? Just understand the basic principles of your business and your product, but also what differentiates you from other businesses like Helium. Where do you want to grow? What's your plan also on the product side and integration side, to then figure out, okay, what are good mechanisms to build up an economy that can scale.
Yeah, it makes sense. I guess our competitive advantage would be I'm handsome and have a podcast, but I guess that might not work in the long term for the tokenomic design. This is all a joke, by the way. We're not launching any protocol. Let's talk a little bit about. So we talked like talk us through how they even go about finding their node operators' cost of like maintenance and all that kind of stuff. Is that something you reach out to the node operators and you like survey them on, or is there some kind of tracking software you guys help them with, and then that informs the tokenomic design for the rewards?
I mean, yes, right. When we basically work with portfolio companies, and they are typically in the early phase of, they want to decentralize their supply, they want to set up a token network. At that stage, they would know how much does it cost to operate a node for compute, storage, any service of IoT devices that they have. So in that case, like at that initial phase, you have some good understanding. However, if you talk about established protocols, Pocket network, LivePeer network, there, yes, we actually did a survey, because I wanted to understand, like, okay, what is the cost to run LivePeer network? What's the cost to run Pocket network? And how does it change over time? And yeah, we did a survey with node operators. We went out there, forum posts, community calls, and told them, like, look, do you guys know? Because it's this, what's the word? Cooperative landscape, right? Where you cooperate because, right? But the node operator is also in competition because they are competing for the same cake. So obviously there's not much transparency of like, here, this is what I run, this is what I pay, and by the way, this is how I get an edge to you guys, right? On the other side, if this is not working, I mean, if it's too concentrated that one guy has all the advantage and the other guys are just bleeding, then obviously your supply side can erode over time or just be concentrated. And then what's the point of having a decentralized network where 95% sits with one operator? So yeah, long story short, it really comes down to talk to the node operators, do public surveys, reach out. That is not easy, right? I mean, it's lots of anons out there that you somehow need to figure out how to get in touch. But yeah, it's part of the research process.
And for any aspiring founders listening to this and be like, okay, it seems like we may need some kind of advising. How do they get to, speaking with 1KX? At what stage should they be coming in and like chatting with you guys to get all this great, help?
As we are, a VC fund, we are pre-seed, seed very early on is when we come on. We anyway like to be very deep in the spaces that we invest in. We have lots of other great people that are really good experts in the fields that they are, and if we invested, then that's obviously an entry ticket to kind of like get to talk to me and the other guys in the team to talk token networks and how to design the protocol economics. However, I'm also available, via Twitter DMs or whatever. If people have questions, they can reach out. I post stuff on the research I'm doing, and that's also engaging on conferences. So there's enough space to also get in touch and explore things, because that's also what I like a lot. Not just limited to like, oh yeah, you need to have the 1KX ticket to get there.
And for people that are unfamiliar with maybe like the VC funding rounds, talk to us a little bit about like what is pre-seed and what is seed. Like at what point, like is there a revenue target? Is there like what amount of money is being raised in those like bands? Because not everyone here has started a startup.
Well, I even couldn't tell you all the exact bands because I'm not too involved in the actual investment process again. But it's more like the stage is like for you as a founder, right? Like, because you can also decide of like how you raise money, right? Some guys just have some revenue coming in and can go along with bootstrapping or, friends and family kind of like
Sure.
investments, but then start reaching out for fundraising, because that's also obviously a little bit the question. And to the point of valuation, that also largely depends on, what the market says. I would say probably there's this, if you look now into where pre-seed and seed deals come in versus like what this was 2021. I don't have the numbers, but I'm pretty sure it was quite different.
Yeah, all good. So let's talk a little bit about, a company comes into their portfolio and you're helping with the token economics. Let's talk a little bit about the challenges there are and like some of the qualifications. Like you talked about like surveying the node operators. Like what are some of the considerations and challenges you guys find when somebody comes in either before they've had a token launch or, if they're thinking about launching a token?
Yeah, there's various challenges, right? First of all, token design and economics, it's not something that is top of mind for founders. Not to say that's a bad thing, right? It's a space of builders and engineers largely. And what you see is typically only the end result of tokens out in the wild, right? You don't see the process, how to get there. It's just like XYZ, they airdrop this, and now they do that. And this is what you see. And this somewhat times lead to the temptation, right, to just adapt some existing supposedly successful token model and put it onto a protocol because, like, okay, they did this, then they got like 20,000 Twitter followers and raised so much money with the launchpad. Must be great. Let's do the same. This is something we can educate on quickly. To basically educate them on how to do it properly. And then the challenge is not so much around solving these challenges itself, but having a sequence and a timeline to solve them all together. Right? I've seen protocols that went ahead with the design, brilliant from economics and incentive alignment, but then legal chimed in right before they wanted to hand to engineers for implementation and stop the show. Right? And then they need to go back to the drawing board. And that's why it's important to lay out the process first. With all the areas involved that I mentioned earlier, like legal, tax, the community building, the listing, the liquidity integrations, that isn't easy. And that's typically the part where, I try to advise, let's put it this way, the most, to really say, look, it's not something that you can do overnight, not in 1 month, not in 2 months. You need to prepare and plan, because that's the thing. Like token networks, such an endless, unique, unseen design space that you can do. Such a powerful tool, but obviously that doesn't solve all your problems, right? You really need to be mindful of like where you use it and where you apply it, to just not see how your token design maybe even harm your product or your protocol.
Yeah, that to me is quite surprising. I would think you would almost have like templates of tokenomic designs where it's like, hey, we're very similar to EigenDA, or we're very similar to like XYZ company. So then we copy over the tokenomic design of this company, or like Helium's token, for example. So why does it need to be so finely tailored? Like to me, it would seem like something you could almost grab off the shelf, but do instruct me as to why that is incorrect thinking.
Well, I mean, there are components obviously where you can look around and say like, okay, this is a well-established model, it works well. For example, VE curve model, it's a classic example, right? Established 4 years ago, more and more adopted, and even iterate on it, right, to overcome some of the challenges, and tweak it here and there. And this is actually then the point, right? Like just recently, for example, Connext, or now Everclear, they posted their redesign of their design of the Clear token, which uses the idea of the VE curve model, but overcomes some of the challenges of concentration of ownership over time and things like that. Plus, also, I mean, staying at Curve, there was a nice study recently where they compared Polkadot and Curve, for example, just like the behavior of lockups and voting behavior, and it was completely different. Right, it's like Curve, very long-term lockups, even the whales and everything. Polkadot more on the other side of the spectrum. That's the thing. You cannot bring out a mechanism and expect that everything helps the same, because you might not appeal to the same community, the same type of user behavior. And this is the stuff you need to establish first. Like, do we have the same audience? Do we have a similar community? Do we have a similar investor base? Do we have a similar, macro environment that might impact also the decisions and things like that? And this is why typically we say, well, instead of taking something off the shelf and then thinking about all the direction which it might or might not be applicable, let's rather start from first principles and understand, what do you want to do with your product, with your protocol? Where do you want to head? When do you want to decentralize? How much do you want to decentralize? What's your product roadmap? How can the token help you achieve certain things? Fundraising, user acquisition, user retention. There's so many things that the token design can help you with, that you really want to be mindful and establish first what you want. What are your stakeholders? What is this user audience that you want to appeal to? How can you reach them? Do you really need to give them tokens? Maybe there's other ways. And once you have that understanding, that then you look at all the different modules, I would say, staking, VE curve model, all these other things out there, to think, okay, will this fit? And also, will this fit if we put them together, right? Because nothing's worse than just like copy pasting, similar to coding. Just copy pasting different libraries and make a Frankenstein code is typically not a good idea.
Well, previous of my employers may may know I was all about the Frankenstein code. So let's talk a little bit about, let's say this makes complete sense if you haven't launched a token and you're starting from complete scratch. Let's talk about when companies come to you and they've already launched a token. They're like, hey, we've got this tokenomic design, the incentives are off. Talk to us. Is it easy? How does one even update the tokenomics while they already have a circulating token? Or are they just like dead in the water?
Yeah, this is a tough one, because that depends a little bit. Because, I mean, if you decided early on you follow the Bitcoin token model and set the plan in stone forever, immutable code, nobody can upgrade the protocol, there's not much you can do if you figure out that this went wrong. Luckily, most protocols don't handle it this way, and there's always something you can adjust and adapt. but yeah, there's various ways you can do it. Be it in adoption of inflation. I mean, Pocket is a good example, right? There's ongoing community debates of like how should we manage it. We might over incentivize the supply in the beginning that created too much pressure now, but we still fixed a lot of the cost efficiencies, so the network is scalable from that perspective again. But how can we now incentivize the demand side more, because that's just like, so they're anyway more dynamic, and they can help a lot because they have lots of wiggle room and freedom to do so. But then there's also protocols where it's just like, well, let's just relaunch, right? We started and we did it back then. Sometimes they don't even have everything in circulating supply, and then they'll just relaunch or migrate. Covalent, for example, is an example. They just migrate from the CQT to the CXT token, and that can happen for various reasons. But here we are luckily always quite flexible in how we can still adjust things. There's not that many protocols. I wouldn't know any protocol out there that is on the Bitcoin side of implementation of their token design.
Yeah, are there any companies you see out there where you're like, I really find their token design to be like a work of art or like very innovative?
I would say a lot of interesting concepts out there, where you say, okay, this is in itself tackles a certain problem. It's really cool. I mean, the curve model and the adaptations, right? The E33 and all the adjustments to overcome the challenges is a really good one to align really the kind of like the skin in the game and the right to steer the ship, so to speak. So this is really, really well put together with the game theory concept of, well, you should always log marks, because if you don't, then somebody else has the strategy to compete you. So you should do it as well. So this is really, really good. Or like, this is one of the ones I like a lot. But then there's also new concepts where, you just see protocols playing around with lessons learned, that I would say is not something I recommend our protocols to do as well, because again, they're very much tied to the audience. For example, probably one lesser known is what Tapioca DAO did recently for their airdrop. They did an options drop. I think that's what they call it. So instead of giving you one token, they give you an call option for the token, which you need to buy. So effectively, you, instead of getting $1 in token, you get 50 cents, and because you need to pay 50 cents for the call option, but now you kind of like can choose, or it has a certain expiration when you can basically exercise that right to get the token, right? And this is really nice because, right, there was this, like, I think it's now going on for years, this debate why airdrops are so broken as a means of distribution. And we're like, well, yeah, if you want to have skin in the game, you can do an ICO, which creates other problems on the regulation side. So probably can't do it right, or you need to find the right channels to do it. But such airdrop mechanism is basically a way to also kind of like get skin in the game. And yeah, it's behavior economics, right? That the step from giving something out for free versus you need to give something, it's not linear. It's like a step function, right? And this at least dynamic wise, I haven't checked it, at least after launch, that looked quite positive what they did. And yeah, all there's tons of these innovations out there, be it on distribution, fundraise side. You can also look on the governance side, where I work closely with the TE Academy, Token Engineering Academy, which is very much on the forefront of like exploring these mechanisms. And they did something recently, what they called, I hope I get it right, reputation weighted based voting, where it's not just like your token vote, but you kind of like through going through the courses that the TE Academy does, establishing that you're an expert in the field, getting more to say when it comes to, I mean, they voted on giving out a grant from the TE Academy. and obviously the guys who know the stuff went through the school basically and had the token engineering degree, getting more to say in distributing this grant. So yeah, long story short, nothing favorite, but just like enjoying a lot all these smaller pieces on how to overcome certain problems that are specific to the token economies.
Absolutely. And one of the things of OKX is that you guys believe that really for the future of like humanity and finance, we need really good token economies. Talk to us a little bit about like why you guys think token economies are the future, and like how you guys are propelling that forward.
So yeah, I mean, it's just how long do I have? It's the main part when you think about it is what these token networks allow. It's a complete new form of coordination, right? I think there's a Chris Dixon quote that says like the Web3 is the internet owned by builders and orchestrated with tokens, right? And this coordination tool so far used to be money. Money used to be the easiest and most powerful coordination tool that we have. However, since it's so powerful, it used to be controlled by whoever is in charge, because they knew, okay, with that I can do whatever I wish to do, basically. And that leads to like lots of fragmentation and kind of like a stifling innovation, right? Because if you are in your wherever you are and you will have an innovative idea, you kind of like tied to wherever whatever your local capital infrastructure has to offer. You need to go to the VCs. You need to pitch them in if they don't want you, because for whatever reason, regulatory ROI targets, whatever, they say no. I mean, then you can maybe go seek friends, family, or whatever. But at the end of the day, it's tough, right? And token networks offer a way to overcome that. You get a global audience, right? And it's built on the blockchains where, yeah, these are the trust machines, right? These are the things where everything's verifiable, it's permissionless, so it generates a trust. So with that trust, as I said, is money, or I didn't say it, but the value of money is trust. So that means these systems, this blockchain, can create money, can create these new coordination tools, and this is quite nice to see how you can build on top of it and just create. Yeah, the design space is endless because it's programmable, right? It's digital. It's not like these paper things where you need to think how to do things, but you can come up with all sort of things. And we've seen it so far, right? We've seen that there was people use it for governance, people use it for ownership, for payments, and the most interesting piece is when they combine it to bake in the value capture, creation, and transfer together with incentive models, which then also creates a boost on attention for this global audience, as we have seen for basically any hype cycle in the past. DeFi, NFTs, meme coins, you name it. It was always kind of like some new use case for token networks.
Absolutely. And let's talk a little bit about where listeners can learn more about what you're up to, what 1KX, maybe they have a company that they want, some funding for or some advice for. Talk to us a little bit about where they can find you guys online.
So yeah, I mean, 1KX has a website, 1kx.io, also on Twitter at 1KX Network. My Twitter handle is at KoshikRobert. Might be harder to spell, but I guess if you connect that with 1KX, you'll find me. Where I typically, I mean, I'm not a super frequent threader, but whenever I'm coming out with more research or something interesting that I see with the work we are doing, then I'll share it there as well.
Amazing. Well, everyone go interact with Robert online. His DMs are open, and then go get involved with 1KX as well. So, Robert, thank you so much for coming on to the Building Web3 podcast, and to all the builders out there. Let's keep pushing the future forward.
Yeah, thanks for having me.